Hi, it's Woody Henderson with American Dreams Real Estate, and greetings from Porto Santo Stefano, Italy. Although on vacation, I know that a key to success in real estate is being consistent. So I'm going to be consistent, and this is our San Diego monthly market update. Let me share my screen with you. All right, this is the San Diego housing update for October 2021. We had a very interesting summer and a more interesting fall, and excited to share the data with you. Today, we're going to talk about San Diego key metrics, median home price. We'll talk about inventory and mortgage interest rates, and then the effect of owning property on accumulating wealth. So key metrics, the median home price took a slight dip in August down to 730, but came back up to 749, a near record price. That's up 15.2% over the same time last year. Market time is up slightly from August to September, but down by 22% over the same time last year. Same situation, inventory is up slightly between August and September. However, inventory is still 37% lower than where it was last year. Months of supplies remain steady between August and September, and we're down 50% from the previous year. The number of sales is down between August and September, and it's down 7.8% over the last 12 months. So what we've seen is prices have risen while all other indicators are lower than where they were last year. Let's take a closer look at the San Diego median sale price. In September 2020, it was 645,000, and in September 2021, 749,000, more than $100,000 in appreciation in that 1 year. This slide shows the San Diego list price to sale price, and we see that we're still over 100% and have been since the beginning of January. So this indicates a pretty strong, a strong seller's market with homes selling over 100% of asking. So is competition cooling? Maybe a little bit, but we're still not seeing that the impact. The number of active listings peaked or rose from March to July and then has dropped slightly. And this just may be seasonal variation that we see as we enter into the fall months. However, we still have and have had in all of 2021 record low inventory relative to historic inventory here in San Diego. Let's talk about inventory and demand. Fall is usually the start of a slower season in the housing market, but nothing's usual in today's housing market. Potential home buyers are seeing slight rise in inventory and consequently rushing back into the fray. Mortgage applications to purchase a home also have gone up. So I held an open house last weekend at one of my listings over on Tobias, and I talked to buyers about how long they've been looking and what kind of situations they've been in. And several of the buyers mentioned that, oh yeah, we were in the market in the summer and then we decided to get out and now we're back in again. So the buyers are still out there and they're coming back. Interest rates, the single biggest risk to housing is rising mortgage rates, and it's a real possibility in the next year. In my previous market update, you see that all of the experts are forecasting increases in interest rates in 2022, which will have some sort of impact on dampening prices. We're likely to see more of a decrease in the rate of appreciation or a flattening in home price, depending on what area you're in, but it's a far cry from any Great Recession or any market crash. This slide shows mortgage interest rates since January of 2020, and we see they dropped and rose and then dropped, and now they're on the rise again, just over 3%. Where are we going? Well, looking forward, we're likely to see interest rates in 2022 start to go up. And what does that mean for buyers? Well, this slide shows purchasing power at various interest rates and price points. So if you look at the far left column, the $400,000 price point, at a 2.75 interest rate, the monthly payment is $1,633. If that interest rate goes up to by 1.25% to 4%, now it's 1,900. That payment is over $1,900 a month, more than a $300 per month increase to buy that same home. If you take a look over at the 340,000, if mortgage rates jump from 2.75 to 4%, the purchasing power for that $1,600 a month payment will drop by $60,000. So I wanted to share with you current market conditions. This is 14127 Tobias, and that we put on the market last week, and then held open houses on Saturday and Sunday. We had 40 showings on. Saturday. Those were scheduled. More than 100 people visited the property. We had 127 visitors to our open house, 13 offers. We were sale pending in 2 days, and we were at $100,000 over asking with multiple offers. So this market is very strong. And the average market time in San Diego is now 20 days. We've developed systems and processes where we are selling homes twice as fast and for 10% more. We have a whole system and process. If you're interested in knowing how we do it consistently and have been doing it all through 2021, give me a call. Now, I just wanted to talk about accumulating wealth. One of the things that I firmly believe is home ownership is a key to accumulating wealth in America. Renters will lag behind in the accumulation of wealth, while owners will lock themselves in at a fixed payment. Prices may go up, but they'll always have that fixed payment. Whereas we're going to see rental rates go up in the future. The key to accumulating wealth is to purchase. If you don't own the roof over your own head, you should take a serious look at making that dream come true. In summary, the median sale price leveled in the last couple of months, but it's well up over where it was last year. Inventory is up slightly, but still historically low. There are more buyers than sellers in the market. Homes are selling above asking and continue to do so. And interest rates are historically low and forecast to increase. So for sellers, take advantage of record prices. Buyers, now may be the best time to make a purchase. So until next time, arrivederci. And if there's anything I can do for you, let me know. My contact information is right here. If you're watching me on YouTube, please like my channel.